Welcome. Once again, another episode of our Facebook Live. Guys, we've been out for about a couple of weeks and now we are back with a full swing. Today, we got two heavy hitters right here, joining Tom and myself. I got Johnny Walker and Glenn Vo. So, guys, give it up for them. And today, we are going to be talking about something really, really important, which is diversifying investments as well as doing a due diligence. So, with that being said, Tom, I'm going to pass it on to you, and let's get the intro done.
All right. Welcome everybody to another episode of our Facebook Live. And so excited tonight because we've got some special guests with some special news, special announcements, special things going on that we're going to talk about. And very excited. My name is Tom Bibi Verghese. I'm a serial entrepreneur and I've started with no experience in real estate. Now I'm investing in over 1,000 units, and we share our stories here all the time. Anybody can do it. I didn't know anything. Any beginner can do it. But today we're going to talk about something else that's going to be especially important to help you accelerate your journey. So let's kick it off. Who's going next?
Well, Dr. Vo, you want to bring it in the summit, man? You're the hype man. You're the hype man.
I met Jonny and actually I met Dr. Noel not too long ago, actually this year, right? And again, I started like all the other dentists, just kind of picking their brains and asking them what was out there. And the amazing thing is that, there's so much information out there. There's so much different ways to kind of grow your wealth rather than being chained to your chair in the operatory, right? That's what we're used to doing. And so when I was talking to Dr. Jonny, I was like, look, this is amazing stuff. Doctors need to know about this because here's the thing right now, when everyone thinks about real estate, they're thinking about buying houses, flipping houses, doing Airbnbs, doing all this. They think that's the only thing that's out there. Well, guys, when I'm thinking about that, I'm thinking, well, I have a job right here being a dentist, and now I'm flipping houses and fixing toilets and putting drywall up and all that stuff. That doesn't make any sense, right? That's like literally I'm just trading being a dentist, becoming like a general contractor or a real estate agent. Well, guys,
and making less of that job.
Yeah, and so the thing is there's more to it, right? So when we're talking about passive investing, so many dentists, they think passive investing is okay. I'm going to flip houses and do these short-term rentals. That's not really passive, guys, right? That takes a lot of work. And so that's what this event's all about. Jonny's bringing some amazing people, including these two gentlemen that are right here with us as well, to open our minds, to show us what's really out there. So I'm really excited about that. And John, I'll let you talk about some of these, including yourself, but some of these amazing speakers we have coming to the summit.
Sure. Thanks again for having us here as guests, Dr. Lou and Tom, my boys from way back here. So. Of course they're going to be at the panel. Like what we really wanted to do, I've talked to Dr. Vo, and his story is pretty common amongst dentists. I'm sure Tom and Noel would agree. Like, hey, look, how do I break away from this thing? And it's like, that's why we formed, this group. That's why Tom and Noel formed these groups. To passive investing is a way that we can participate in getting all these advantages of real estate, but not creating another job, right? And that's how you can create income. If we can create sources of income, this is how we can get freedom. And that's what this summit is really about, right? If through my journey, I started as active investor, had 10 properties. I've had all types of commercial real estate. I've owned real estate for over 15 years. So I know what it is to be an active investor. And I know that me trying to be an endodontist and do this at scale, it's just not possible. You become a mediocre landlord, a mediocre doctor, and a mediocre family man, right? So going passive is the way, that you get freedom. So we created this summit. I created now a group of people around me through masterminds, through conferencing, through networking, through just investing and doing all this stuff. I had amazing group of mentors, advisors, people around me. I want to share this by creating this summit and bringing this group of people together. And so we already the summit is coming up, by the way, is August 16th in Dallas, Texas.
Guys, wait, I don't think our group knows about the summit actually. So guys, Dr. Jonny and Dr. Glenn, they're hosting a summit in Dallas, and it was actually sold out, and they have added more seats. That's what they're talking about. Actually, these summits, let me say something about the summit. This, what we are doing right now, would never have come to pass if I was not at a summit. I met Noel at a summit, and I met other people over there. We did so many deals from partnerships, and that's when I realized the power of the summit. So that this is something that they have put together, and this is mostly geared towards doctors, dentists, medical professionals. So, guys, if you're anywhere in Texas or anywhere, you got to be there at the summit. That's what do you think, Noel? I was talking about how we met and the summit and all that stuff.
Oh, absolutely. Like here's the deal. If you're in the summit, you're going to meet people you are definitely going to be connecting with, and all the other guys that you want to learn from. And where other place is when everybody comes together. And thanks to Dr. Jonny and Dr. Glenn, that these guys have put this together, and we have the privilege of being part of the panel and discussing like what it takes to get started. So not only us but them, but also many other speakers and many other guys who are actually investing, who are not going to be on the panel, but they are going to be there present as audience. So definitely come on in, connect. Let's make some friends, and let me and Tom and all of us meet you guys in person.
That's the other thing. You hit the nail on the head, both Tom and Noel, right? Like the speakers are going to be great. Like we have a guy that started has a $2 billion of multifamily real estate. We have another guy, a mobile home parks expert. We have an IRA expert, like retirement, saving money on taxes. We have oil and gas expert. These are industry leaders that, let me tell you about the oil and gas expert. She just shared a stage with Robert Kiyosaki and G. Edward Griffin, which are two personal heroes, right? Kiyosaki is the author of the Purple Bible, Rich Dad, Poor Dad, and she literally goes to lunch with this guy, right? So these are really high level. The quality of speakers is really this should be a $3,000 summit, right? But we're going to do it for $300. And tonight we're going to give away. I know Dr. Vogt said, "Hey, no more free tickets." We agreed that we're not giving away free tickets, but tonight, on this live for this group, we're giving away 2 free tickets. All right, Dr. Vo, I hope you're okay with that. And so they're $300 each, or $600 we're giving away. So it's free tickets for anybody that DMs Tom or Noel. You can get the free ticket. Now,
Man,
the other thing is the networking, right? The networking, the type of doctors that have already registered. We already have 78 registrants. It's really quality, high-level people. Right? When you put that type of room together, we got industry leaders and all types of things, plus high-level doctors that are all like-minded, all trying to succeed. What happens is you learn more, you succeed faster, right? You get motivation, you have accountability, start trying to reach your goal. You want to, you build network with really high-level people, right? People that are really serious about achieving their professional goals. And that's the type of thing that adds jet fuel to your growth. Right? Like summits, like these guys met at a summit. I started really growing and expanding at summits. I've been to Dr. Vo's been throwing summits for some time. I mean, what do you think about what's your thoughts on summits and in general, and how do you get value from them? I mean, Dr. Vo, like, what do you think?
Well, I mean, there's a popular saying that your net worth is related to your network, right? I mean, there's that popular saying, right? And that's so true, because what happens is that when you're in the right rooms, that opens your mind, that gives you more opportunities. I mean, that's how I met pretty much these guys right here, right? So again, we are just so excited about just having this. And what really this started off as, I asked Dr. Jonny, it's like, "Hey, could you bring a couple of friends so that I can meet them? I'll bring some friends too. I'm just trying to learn a little bit more, because I'm like one of these dentists as well. I'll share a story. I would say it's a horror story, but as I thought about it and as I talked to Dr. Jonny about what I went through, it's just an expensive lesson. I'm going to share that later on as this live goes on. So for those who are watching, you're going to have to wait around a little bit, okay? You can't just bounce on out of here, click that link and bounce out of here. I'm going to tell you that horror story, but going back to, this started as we wanted to bring a bunch of people together with an abundance mindset so that we can level up and learn, right? He had a lot of questions for me. He was like, building community, investing in dental companies and all these different things. I had questions for Dr. Jonny as well, right? And so he was bringing his friends, and what happened was, well, a bunch of people was like, "Okay, well, can we come?" I was like, "Okay, we're going to limit it. We're only just going to have like 50 people. That's it." no more. Okay, we can't even fit any more people in this area. And then there was more. And then we looked at each other. It's like, look, we can't be one of those guys that say, oh, I'm so sorry. You're going to have to come next year or whatnot. So literally just begged to get the adjacent meeting room. And we got that. And literally the space was like, we don't have anything else for you guys. All right, that's it. And so here we are. So again, we have 15 seats still. And it's going to be a lot of seasoned veterans, a lot of newbies as well. So again, it doesn't matter where you are on the investment experience, you're going to run into people who either have the same experience or have the same concerns or have the same questions. And we're all just going to come together, network, and level up. And so that's what it's all about. That's why you should go to these meetings. That's why you should go to these masterminds. People always talk about I can just do things virtually. I'll tell you what, the magic of meetings is not when you're sitting there listening to the speaker. We're gonna have some great speakers, and I'm not telling you guys not to listen to them, but the magic happens is when you're on break and you're in the hallway getting a coffee and you're talking to somebody, right?
That's such
or you bump into someone, you ask them where they're from. That's where the magic happens, and that magic will happen at this meeting. So I'm really excited about it.
For sure, yeah.
One thing I want to add is that a lot of times people are kind of a little bit intimidated, right? When they go to these kind of summits, they're like, oh, I don't know what's going to happen. And I just want them to be rest assured, because this is going to be like a room full of doctors, dentists, just like, them. And if you're a professional and you want to meet like-minded people and you want to be like, hey, how did this guy who is a dentist also running a practice and also investing, how did they do it? I think this is the right opportunity.
Yeah.
So just to throw it out there. All right, guys. So let's dive into the topic today. All right, Dr. Jonny, I'll let you take over. So
we're talking about
investments, right?
Diversifying. Yeah. So early on when I started with this stuff, right? I knew a lot about multifamily. Tom and Noah, you know this. We used to be all multifamily guys. You guys came from schools of multifamily with Grant Cardone and Brad Sumrock, and I feel like now we had somewhat of a blinders, right? Like we're like, hey, look, we only invest in multifamily because multifamily is the best asset class out there, period. And multifamily is a very, very good asset class, right? It's an excellent conservative asset class. But should you invest in other things too, right? Because even multifamily real estate, just like any other asset class, there's a cyclicality to it. Right. And multifamily right now is in a trough. It's one of the most difficult times to be a multifamily operator. You have the great reset happening. All these operators that are the pretenders are being culled. And so because of that, cash flows are really hard to find. There's still excellent deals out there, right? Because there's a lot of distress. But beyond capturing a home run deal because, hey, we can buy a property at 30% off, instead of that, it's like, where can we go for where are asset classes that have other cycles? And so if you start to diversify your investments into different types of asset classes, you help to protect yourself from these, the cycles of each asset class. So for example, right now, if you're looking at more cash flow intensive deals, we've been looking at a lot of mobile home parks, RV parks, marina deals, excellent sources of cash flow. Because of where we are in the market right now, interest rates are really high, lenders are sparse, lending environment, investing in debt is excellent because you can get extremely high returns where you're lowest on the capital stack. So you get the lowest risk, right? And you can get assured income and you can get very high returns because of interest rate. So this is a time to pivot into some fixed income, private debt. Right. So these are high cash flow. Now that's if you're optimizing for cash flow. And that's why you have to have a strategy with diversification. It's not just, hey, look, there's a great mobile home park deal, I'm going to invest in that. Hey, there's a great apartment building, I'm going to invest in that. Hey, there's this hard money loan opportunity, I'm going to invest in that. I'm not talking about doing a shotgun approach. I'm saying, hey, we should know what our strategy is, right? A beginning wealth builder that's starting out, for example, would have a different strategy than a dentist that is exiting selling his 3 practices to do DSO for $12 million, right? There are different needs at that point between the two. One of them is start trying to build wealth and equity, build right from because they're at the beginning. And then you got other guys that already has $12 million. He already has a ton of equity and wealth. Now he's exiting from his practice. He needs some income to replace what he was getting from his business. So he's going to invest in cash flow optimized strategy, right? So now you pick your strategy and then you find investments in different asset classes that move you toward that goal. So that's where I kind of landed with diversification, and I still think multifamily is a great asset class, but I'm saying that we should have other things in our portfolio. I mean, what are your guys' thoughts?
I want to hear Glenn's intake on this one here.
Sure.
Like, what's his like take on this?
Well, I mean, I certainly agree with what Dr. Jonny's talking about, and that's the diversification was the reason why I wanted to reach out to him and learn more about what he's doing. What I've done is obviously invested in multiple dental companies, and just the community that I have and the connections, the network I have, has allowed me that opportunity. And what I'm really excited about is, a lot of times people are like, well, Glenn, I don't have your network, or I don't have your influence. No one's going to come to me and allow me to invest. And I said, well, we're going to change that. Because for far too long, like we would support companies, the founders would, they grow the company, they get their bag and they leave, and that's it, right? They get their exit and they're gone. Well, all of us dentists, we'd love to go through that. In fact, a lot of us have gone through that with our practice, and so that's something I'm really passionate about bringing it in. But when it comes to real estate, I'll be the first to admit I'm a novice at it. Look, whatever I know is whatever I'm researching online. I'm reading people's posts and whatnot. The thing is that I went to dental school. I went to 4 years of undergrad, 4 years of dental school. Paid my dues as an associate. I have years and years and years of training as a dentist. We all do, right? But then all of a sudden, you read a couple of Facebook posts, you go to a weekend mastermind, you're pumped up. You're like, all right, now I'm going to take the same amount of money that I put into my practice. Now I'm going to invest in real estate. Now, if you really sit there and think about it, this is the most absurd idea ever, right? But yet we see it all the time on social media, right? And so, now, of course, we fall in love with that idea because we see other people having that success. And again, it goes back to the summit. Why are we doing the summit? Because we want to make sure people don't make a mistake. And I'll tell you what, I made a huge mistake, right? We've all made mistakes in real estate, but recently, very recently, myself and hundreds of dentists who were part of masterminds where they were paying 30 to 50,000. Now I think it's like 100, almost 100 grand now to be in this
140 grand now.
140, right?
Yeah.
We all met this person, this vetted sponsor, right? This real estate entrepreneur where, okay, we just invest in his deals and do some hard money lending and all those things. And it's easy. And for myself, I worked with this individual who's worked with hundreds of dental professionals and also other healthcare professionals for 6 years, getting my 15 to 20% return. I was like, dude, this is so easy, right? Well, very recently, he disappeared and we were all concerned. His wife posted how he's missing. There was a police reports, all these different things. And then we got this dreaded email from his chief of staff saying that after all this investigation, the lead detective has determined that his disappearance was intentional.
What happened? You cut out in between. You said the lead disappearance what?
The lead investigator, the police investigator, he told everybody that it's based on their investigation, they determined the disappearance was intentional.
Wow.
So let me put it in like street terms, like something me and Jonny understand, okay? Dude took money and ran, okay? Literally, to the tune of about $25 million. I actually talked to a dentist who invested with him. And it's probably one of the saddest stories. And it really put everything in perspective. And just full transparent, I'm gonna let everyone know I lost $100,000 here, right? I lost $100,000 and I was a little annoyed about it. And I thought about it. I was like, well, you know what? I'm still healthy. My family's healthy. No one's hurt. Everyone's still alive. Okay. And when I talked to Johnny, John's like, look, man, school of hard knocks, man. Best teacher out there. You got a major lesson. And I talked to this dentist, and I talked to him the other day, and he, in fact, with this particular individual, they went to the Masters. He's an avid golfer. They went to the Masters together. They went golfing together. This guy was like literally buddies with this guy. And I was friends. I consider him as a friend too. This dentist is 70 years old, retired, sold his practice already, and literally lost everything. Literally lost everything. He asked me, he was like, Glenn, what am I going to do now? I asked him, I was like, why don't you come to the event? It's like, what am I going to do, man? I'm 70. I can come to your event, but what am I going to do? I said, I don't know what you're going to do. All I can tell you is that you can come here and let's talk, man. You got some people with that have some empathy, and they want to hear and they want to help out somehow. But that's what's going on. So when I tell you guys that there's definitely dangers out there, I'm working with someone. All my friends are investing with this guy. Well, yeah, hundreds of dentists invested with this guy. I invested with this guy for 6 years, getting return upon return, and what I didn't realize was I was just in a cog in his Ponzi scheme, and he just cashed out, and some poor sap came in at the end and was footing the bill. So why is it important to have events like these that we're talking about? It's important because people like Johnny and Dr. Noel and Tom, they have networks that are vetted, that it's not just one guy just wheeling and dealing. And I want to let Johnny explain what makes things different there. But I wanted to share with everybody what I went through. And honestly, there's hundreds of dental professionals that went through this. Yeah. I hear their stories all the time. I'm not going to tell them who they are out of respect to their privacy. That not everyone's going to be comfortable saying they lost a whole bunch of money. But I am, because I want people to realize that it can happen to anyone. And trust me, I know a lot of people. I did my due diligence, and I talked to 20 people who did business with him. They said, this guy's a stand-up guy. Well, me and those 20 people, we also got all ripped off as well. So just want to share that. It's just like it's great to go and learn these different things, but you got to be really careful, Mm-hmm. So I'll let Johnny talk about some of the things that he does and that his group does and the people he work with to make sure things like this don't happen, or at least limit the chance of it happening.
Yeah, I mean, thanks, Glenn, for sharing that. By the way, it took a lot of courage to do that, but I think it's but you know what? You paid tuition in the School of Hard Knocks, right? And sometimes those are the best lessons that you can ever have. And $100,000, it's a lot of money, but it's not money that's going to sink you, right? It's not going to sink your family, and it's something that you'll bounce back from, and it's going to make you a better investor, I think, in the long run. What's really unfortunate about this is that it's so many dentists involved. I made a couple of posts about it, and some of the people that have invested heavily with this guy reached out to me privately in a DM. And, there's a group that left that mastermind that vetted this guy, and they formed their own little mastermind. And they were like, hey, look, all of us have lost money with this guy. Some guys have lost as low as 50K. One guy lost as much as 900K. I mean, you're talking about some guy's life savings. Yeah. This is really bad for passive investing, period, right? This is really bad for what Tom and Noel's doing, is really bad for us, because there are bad actors in this game. There's bad actors in every game. Even as dentists, there's bad actors. There's dentists that do over treatment plans so that they can hit production goals. They do unnecessary treatment. They do Medicaid fraud and bill for millions of dollars of stuff they don't do. There's bad actors everywhere. But what makes this case really shocking and really egregious is how known this guy was. Mm-hmm. He was known in multiple circles. He's been accepted in multiple big name groups, not just the dentist group, but multiple other big name groups that have also vetted him. Now, the problem is with these fraudsters is that in this industry, there's a backslapping culture. So it's like, hey, look, automatically, hey, if he's down with him and he's down with them, then we can let our guard down and he's good with us too. Right? And I think that might have been what happened, because there were some egregious things that were missed that, if proper due diligence was done, would have at least drew some red flags, right? So I showed Dr. Volar our due diligence process. It's very robust, and it's done collectively amongst a group of us. But some of the things that were simple, low things that were missed was that doing a background check on this guy. If somebody had just done a simple background check that cost $250, you would have seen that he has a conviction for perjury in 2011.
Wow.
Right? The convicted liar. Right? So now this is obviously should draw some major red flags on the sponsor due diligence. Might even be a deal killer, maybe. Right? So the sponsor due diligence is the most important part, who you're working with. So now we've had a big loss of trust. It's like, how do we trust anyone now? Right? So now and you need trust at the end of the day before you make an investment that, hey, look, these guys are going to do what they say they're going to do with the money. Right? So these type of fraudsters are really tough to catch sometimes. But now that's one thing. Now, another problem that happened was that nobody knew anything about how this organization was set up, right? Who was running anything? It's when things unravel and this guy disappears, there was nobody behind him running the show. He had a chief of staff that didn't even know the inner workings of the business, right? So if we had examined, hey, what's your org chart? How does this work? How does your company structure? If you're a really big guy where you have all this capital coming in and you're doing all these deals, there's always an organization. You have a team that has delineated responsibilities. This should have been looked at. Then looking at the org chart of just the flow of money and understanding the PPM and all of the documents, right? Who is the managing entity here? Where does the money flow to? And who controls the flow of that money? There should have been some type of verification of even deeds. Is this guy actually doing what he's saying he's doing? Which he wasn't in some cases, because some of the doctors called him out and asked to see the deeds for the properties so this guy's a hard money lender, by the way, right? This guy's a hard money lender. He lends money so he can flip houses, and he lends money he borrows money from doctors and lends it out. And so they asked him, hey, show us the deeds of the stuff that we're lending money on. And he couldn't do it. He said, there was a mistake with one of our staff. And he was on a Zoom call with 20 doctors. And the guy told me he was crying and everything. This guy said he could have won an Academy Award. And said, hey, it was a mistake, and mistakes were made. It won't happen again, this and that. That was in January. They tried to get their money back from this guy, and now he's disappeared. And when he disappeared? June? And sometime in June. So a few months later, now he's gone.
Hey, Jonny.
Yeah.
Did they ever release who this guy is? The authorities? Did they ever tell?
Who they haven't? I don't know. I mean, Dr. Vo. I mean, I'll leave that to you. I mean, if you want to say, say his name. I mean,
but yeah, no, I mean, only if they released it, like made it public. That's what I was.
Oh asking. No, it's. I mean, I can say who it is. It's his name is Mark Jackson. It's I mean, the police report, I mean, not everyone has it, but I've shared that with some other people. But
sure.
This email that was sent by his chief of staff. So again, literally what happened was they started getting red flags when he was disappeared, and all of a sudden they lost access to all of his accounts.
Oh,
then his family lost access. The tragic part in all of this is that we have a man who violated everyone's trust, years and years of friendships, and also pretty much burned the bridge with his own family because they have no idea.
Exactly.
And just got up and left.
Kids and everything.
He left. It's not even his family is not even in on this.
Well, here's the thing. I don't think they are.
For 26 million,
but they're out there. But the feds are watching them. So it's not like he's not going to see them anytime soon. But the sad thing is that his daughter is a dentist, and I'm not going to say what school she's a faculty member, but she's a faculty member at a dental school.
Upstanding people of society, right?
I mean, how embarrassing is that? So yeah, I mean, again,
Now, could have
hundreds.
this been avoided? That's what it really comes down to, right? Like now, why should we trust anybody? Why invest at all?
Yeah,
Just
yeah.
stick money in ETF and just stick your money in some bonds and stocks, and then it's you're gonna avoid this fraud altogether, right? Or maybe not. Theranos. We have Bernie Madoffs. We have Sam Fried Bankmans, right? We have its history is replete with these type of people. But how can we, and we're not talking about Sam Fried Bankman. Is it Bankman Fried or Fried Bankman? The guy, the FTX crypto exchange guy,
Yeah.
billions
Bankman
of
Fried.
dollars. Look at the guys that were backing him. Kevin O'Leary from Shark Tank, who's a professional investor, right? Like this is what he does is look at businesses and buy business. He was not only huge investor, but he was vetting and pushing him on his own channels, right? Like this is so. Can anybody be caught by this? And is any due diligence infallible? And I would say the answer is no, right? You can't catch everything. But there's lessons, there's a lot of lessons to be learned here. Dr. Vo talked about one of the guys that's 70 years old that had all his money with one operator in one type of investment. That's wildly high risk. I mean, if he had diversified and he had, I have 3% or 5% max of my portfolio in hard money lending, I would put 5% in hard money lending if that's what your strategy is, but I wouldn't even put it all with one operator. I would put it with multiple hard money loans. Now, this helps to diversify from any one bad actor, right? So you should never be overexposed with any one sponsor or any one asset class. That's one huge lesson I got from that. The other thing is there was no provisions for if there was fraud. Getting control rights as investors is something you can negotiate if you're bringing enough capital, right? So our fund, we bring large amounts of capital to deals, so we can ask for control rights if there's any sign of misuse or fraud. If that happens, we have the right to step in. Is there a succession plan in place? Here, everything just got frozen because nobody knew what was happening. Everything, we're like, hey, nothing else happens. In the event that the manager disappears or goes somewhere, we know what can happen next in order for us to take control over this business and over the properties that are there and institute our own manager in that place, right? So these are some other things. Had there been really thorough due diligence, there was multiple places that he had red flags. And so my belief is that, yes, this guy, I believe this could have been prevented with thorough due diligence.
But Jonny, this is what I'm thinking here, right? This guy was probably cooking this for a long time.
Yeah.
He had this intention. He just had this exit plan in his mind, but it was just a matter of when. So with that being said, I want to switch gears a little bit with diversifying. So you spoke a little bit about diversifying. Now, diversifying in real estate, diversifying like different asset classes, or are you talking about like diversifying the entire portfolio? So Tom, yeah. I know Tom had like in stocks before, and he kind of diversified from there, and then he went to real estate. So kind of want to hear what Tom's thing is in terms of diversification, and then I want to get to you, Jonny, and then Dr. Vo.
So yeah, this is I think I totally agree with diversification here because we never think about it when the money is coming. We never think about anything else. Like, okay, man, the greed kicks in and like, man, I want to put all my eggs in one basket, right? Even with real estate. So I'm still invested in stocks. I have a pretty decent portfolio in stocks. I would say 1/3 of my assets are in stocks. And in the last 6 months, it has gone up like crazy. It's just taken off like, I don't know when it's going to fall. I think it went up 40% in the last 6 months alone. The whole portfolio I'm talking about.
Yeah.
But we don't know when it's going to fall. I've been through the .com bust. I was burned during that time, so I'm very conservative now. I'm not playing any roulette Russian roulette here. I'm just a very long-term investing. So, but and then also I have real estate. I've invested in oil and gas. I've invested in and in real estate too. I've diversified. I've not stuck to multifamily. I've got storage, industrial, short-term rental, all these different things. And short and I'm not. See, there is a saying that I learned from somebody that says, "Do not have one of anything." I don't want one of anything. I don't want to be dependent on one employee. I don't want to be dependent on one income. I don't want to be, you need to have multiple. He said, except your wife, you don't need to have one of one of anything. Okay.
Unless
So
you're in a country that's polygamous, right?
yeah. So I've really taken and investing, same thing. I mean, you have to have multiple sponsors. Don't put all your eggs in one basket. Even if they're giving you crazy returns, you never know. So things can happen. I've lost six figures in a real estate investment myself too.
Me too.
So yeah, and it was not a fraudster, but it was an investment that I did with somebody who had no. Actually, you could say maybe term it, but it was borderline like that. They didn't know what they were doing and stuff.
That's a different type. That's a fraudster too, Tom. That's a
Yeah.
different type of fraudster. He's a fraudster that frauded you and say, I can get this job done. This is a great deal. I'm going to go and execute this business plan and get it done. And
Yeah,
he-
that yeah,
you know,
yeah, that right.
fraudster.
So the lesson in that I learned is that, man, so in that one I was going to actually double my exposure, and that was my initial commitment. And luckily I saw the red flags and I didn't follow through with the rest of the money. So and diversification is the key. The thing is, don't be scared, because if I was scared, I would not have, because that was my first major real estate venture actually. So if I was scared, I would not have had, the other successes investing in other things. So you could cover up those losses if you're a little bit, not fearful, bold, and take a little bit of risks. And again, Johnny, you were saying before that, don't put your last money that you have if into real estate. You got it. This is something that you will make a lot of money, and it should not be like, okay, I'm going to take all my savings and dump it in or something like that. So, but still, real estate is the safest investment, and it provides a lot of advantages that stocks and other things don't.
You want to add to that, Johnny?
Yeah, I mean, I agree with everything that he's saying there, because I know, he's also the School of Hard Knocks too. He's paid tuition in the School of Hard Knocks also. So
We've all been through the School of Hard Knocks.
Yeah.
Right?
Right. So, if you look at wealthy people's, I was trying to find a slide and share, but I can't pull it up anywhere. But if you look at the diversification of where the wealthiest people in the country, how they park their money, what percentages, it's completely. So if you look at, say, a low guy that builds a low amount of wealth, maybe $500 to $1 million, 90% of his wealth is usually in their primary home. Once you go to middle wealth, then you start getting it starts the balance of things start to change a little bit. You start having more equities, right? You like stocks, some business income. It's still, these are small amounts. Your primary resident might only make up about half of your net worth. Once you get to the really wealthy people, your primary residence is not is a sliver, right? Maybe 1 to 5%, 8%. But then you look at, okay, we got 22% in stocks, and this changes too, by the way. So like now, I talked to a very high net worth person the other day, Tom, and to your point, now they would change their allocation. So now they have, if they had 30, they keep about 30% of their wealth in stocks. Now when things are at all-time highs is when you start cashing out.
Yep.
Now they start moving. Now he's dropped that down to about 21%.
Yeah.
Right? And he's moved that up. Now he's cashing out because he knows it's a high. There is a crash coming, right? Right now we're on a hangover. Our economy is in a hangover mode where we're just drinking more tequila by printing more money.
Greed is taking over like crazy.
Going a little longer, but there's going to be a big crash coming. The stock market is just a slice of the economy. You ask a regular American, Is it, are we, what's your thoughts on the economy and where it's headed? It's all pessimistic. People can't afford groceries. People can't afford to travel. The average Americans can't go to the grocery store. They can't afford to go to a grocery store. So if you ask them if the economy is doing well, they would all say no, right? The sentiment is not good. People can't afford anything. The stock market is just a small slice. And that is going to correct also, right? So to me, it's like, hey, look, now we know it's all-time high. Let's start moving to other assets. And a lot of, like I said, now the wealthy people have a big portion of real estate, right? 40% real estate, but it's not just multifamily, it's a diverse portfolio of real estate. I heard a saying that says the wealthy people you make to get really wealthy, you have focused, and then to stay wealthy, you diversify. Right. So now it's like, okay, we build a bunch of wealth and now we put it under different asset classes. So now we have fixed income, right? Public debt and private fixed income. We have allocation to real estate. We have allocation to businesses, right? Investing in businesses and startups and other companies that can also provide income and multiples, right? So hedge fund investing. A lot of these guys have portions allocated to that. And then you have, like I said, the stocks they do have allocation in stocks, but that percentage changes with the times, right? Bonds, some people even hold bonds, which, there's really smart bond traders that make a lot of money with bonds too, right? So there's a different, even fine art, right? There's no tax advantages. There's no income, but people make a lot of money with art. And some of the really wealthy have about 4 to 8% in art. Right? It could be fine art. It could be collectibles. It could be all kinds of things. Michael Jordan rookie cards would also fall into that same category, art and collectibles. And so this is a place that only the really wealthy people make a lot of money. Right? Nobody even knows about this. Right? Like don't pay any taxes sometimes. Right? Like there's a lot of advantages to art, and that. And so there's nothing wrong with getting into these type of investments, and it's possible through passive investment to invest in all these deals. You can invest in fractional shares of a Monet painting, right? At $14 million painting, you can own fractional shares of it, right? So there's ways to invest in all these different asset classes. As a passive investor, this is an exciting time to be a passive investor because now all of a sudden we have access to all of these different things that we never had before. Right. So it's just about finding the deals, being able to vet the people that you're working with. That's going to be the key to whether you have success in the long run. But once you learn that, and then, the world's your oyster, really, with this stuff.
Cool. Now, last, Dr. Vo, we still have your horror story that we're going to hear about. And then we also want to hear about you investing in some dental businesses. I want to hear a little bit about that, like briefly.
Yeah, absolutely. Well, the horror story, I'm so thankful that I don't have a worse horror story what I just gave you guys. So I already gave you guys that horror story. There's nothing worse than that. Okay, it's nothing worse than that. Like, and again, now that I listened to how much Tom lost too, I was thinking, and with Jonny lost, I thought to myself, okay, well, I should stop feeling sorry for myself, But the thing is that the whole point of that is that was a example of someone straight up stealing from us.
Yeah,
straight up, right? I mean, again, there's different types of fraudsters. The absolute worst is the ones that straight up steal from you, lie to your face, years and upon years. That's the worst. But dental companies is something that I feel like, whether you're a dentist or let's say if you're an optometrist, physician, I mean, companies that are in your industry, there are so many startups out there that are looking for people to fund them, right? And again, traditionally, most of these companies will go to different private equity or VC firms, but a lot of times when they need the seed round, they're asking their friends, they're asking their colleagues. I've been a part of two major companies that went through an exit. One of them that I'm going to talk about that I'm still to this day friends with this person is they had a dental lab. And I'm going to walk you through the idea of investing in these dental companies, right? I am a dentist. I know what it takes for companies to grow in the dental space. I understand the dental lab, I understand the restorations, understand, okay, do they get these crowns back fast? How much they are, what, et cetera, et cetera. I was in a unique position where I was able to promote them as well, right? But what they did that was very unique for the people who invested is that not only do you have a share of the company, but you can also partake in, getting commissions whenever you refer new business. So when we think about real estate, you think about cash flow, right? Everyone's talking about cash flow, cash flow. So when you invest in a dental company, how are you going to get your cash flow? You get your cash flow through commissions and through affiliate marketing, essentially. So
Mm.
what I'm going to be talking about at the summit is there is a major company. I'm actually going to go ahead and mention it right now because it's pretty much public. It's called Archie. It's a cloud-based practice management software. Now, for your dentists that are listening out there, you understand that pretty much every practice needs a PMS, correct? Yeah, you do. Okay. Whether you want to invest in a PMS or not, you're going to have it. Now, the lifespan of a normal client for a PMS is about 7 years. So everyone's going to get on PMS and they won't switch for 7 years. Okay, and they got to pay this money here. Now, the great thing about Archie is a cloud base and it has all the bolt-ons put in together. Now, for those who are not dentists, they don't understand what I'm saying is this. Okay, you have a software that you need to run all to look at all your patient charts and whatnot. Then you have to get these other software to send like email reminders, doing reviews, all these different things. Well, this particular platform has everything all together. You don't need to go anywhere else. Okay, that's number one. Number two, for the people who invest, right? Right now, we are asking anyone who wants to invest, you have to become a user. Now, why is that so important? Because the venture capital company, the venture capital that then put the money into the company, they are seeing that's invested by dentists, and dentists are also using the product, right?
Mm.
Now, here's the beauty of it, right? Is that there's an ambassador program for where whenever you bring in a client, you get the cash flow, you get the commission for them coming in, right? And you get that residual right there. So it becomes a win-win. So that is just one aspect of investing in dental companies. There's so many companies, there's so many startups there that you can do. And of course, you got to do your due diligence, just like real estate, right? But the difference is, unlike real estate, unless you are a Tom, a Noel, or a Jonny, unless you're those three guys, you probably don't have that much knowledge, right? You probably went on to bigger pockets, you read a couple of blogs, and then you think you're an expert, right? The difference here in dental is that you work dental. You went to
Right.
school of dental. You know what a PMS is. You know what a dental crown is. You know what a zirconia crown. You know all those things. So that makes you at least a educated investor. And so that's what I'm going to be talking about. That's what I've been doing. I've gone through 2 exits with these dental companies. I'm excited about Archie. And a big thing about the Archie platform is that for me to be involved, I talked to the CEO. I said, you got to let my fellow dental professionals invest too. Like, I want this to be a thing. For far too long, there's all these companies that come in and, oh, you've seen it. You know, they come in and they blow up, and then all of a sudden, you know, someone writes a goodbye letter to everyone, say, hey, I'm stepping down, blah, 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 blah. Yeah, because you got your bag and you left. Right? You left, right? What I'm saying is we want to all grab a bag, part of that bag, and leave too.
Love it.
That's the whole thing with the RG.
All right, all right. That was awesome. Play it, man. Come on. Make it louder.
Archie Andrews, man. You had some comments here too. There's some very good comments by Dr. Lamberton. It looks like.
Yeah, you want to read them?
Yeah, it says the counter argument to diversification, though, is that it's difficult to be a great investor in all these different industries and submarkets. How do you become knowledgeable about all these different investment classes? That's a great question. Tom, Noel, you guys want to give a crack?
Well, that's a great question, and that's really the downside of diversification. You don't want to be too much diversified too, just because I have to be, just for the sake of diversification, don't diversify. If you don't know, that's actually a great question. So, if you look at Warren Buffett and all that, they say, hey, diversify and all that. But at the end of the day, he's only invested in his holdings are in Berkshire Hathaway stock. Same thing with all these founders who got wealthy, right? Because they know it so well that they know that they can control it almost, right? But
Berkshire Hathaway owns a wide variety of diversified
companies, but he's telling others to diversify, but for himself, he only invests in Berkshire Hathaway, and that company invests in other things. But the as passive investors, we don't get that luxury, right? So that's a great point. You don't just go and diversify for the sake of diversification. Pick one. If it's real estate, pick that. Learn learn about multifamily, and then go in on that. Then once you understand, it's not that difficult to understand these things. I mean, sometimes you have to make a small investment, be a passive investor to learn some of these things, so make maybe a 50K investment, and then you can get on the meetings and learn more about the business, and then go from there rather
I
than
got
just diversifying.
Yeah, I got a little different take on this. So, if he's a doc and let's say he owns a business or if he's a W-2 worker, I mean, it all depends on everyone's situation. Everyone's different. But my thing is, your main thing should be a main thing. And if it's your business should be getting the first and foremost, like investment.
Yeah.
Take that to the heart, take that to the bank. You will always cash out, right? Now, you do have separate allocations for passive investment. So let's say if it's a 20% or if it's a 10%, we all know that, okay, what do we do with the next 10%? Do I want to be involved in this or not? Now, if you don't want to be involved in this, pick your safest bet, right? We all become wealthy not because we are all diversifying. We all become wealthy by streamlining and focusing on one investment. And number one, first and foremost, is yourself, then your business, then your family. And then after that, I would say like any kind of this financial investment would be like you got to pick and choose. Like Tom said, you cannot be like diversifying, like, just to diversify. Okay.
No, I agree 100%, man. Yeah.
Any other comments
Um,
there, Johnny?
yeah, I
Johnny's
mean,
got a lot to
that,
say.
yeah. No, I mean, look, I've changed my point of view, right? And it's because of what I've been exposed to, right? I'm a group of fund managers um, that are really savvy investors, guys that have been doing this for, some guys have been doing it for 30 years investing. They see multiple cycles come and go, all types of different backgrounds of knowledge from previous Wall Street analysts, hedge fund guys, multiple lawyers, accountants. So you get different perspectives from different people, and all really savvy investors. And if you look at what they're, and so I used to be just like that. Hey, look, I don't want to diversify just for this, like, for sake of diversification. But if you really want to have a good portfolio where you've got risk that's really spread and you've got income streams from different asset classes, to me, that's a better position than going all in one thing. I agree with Tom, with Noel, that this is assuming that you've already investing in yourself. The highest ROI is an investment in yourself, point blank, period. Never will you get that in a passive investment. A passive investment is something you do with capital that you've saved in or your money that you're trying to grow for your future self, your future family's future. Now, to answer his question, how do you be a great investor in all these different industries and submarkets? How do you become knowledgeable about all these different investment classes? Well, if you don't have the time or the wherewithal or the capacity to go and learn that all yourself, then the next best thing is to partner with somebody that knows, that are experts in these areas, right? That's their genius. Where, like what you just said, Noel, like, let your main thing be your main thing. Find the guys that their main thing is that thing.
Yeah.
Right. Those are the experts. Now you have to trust but verify, as also Dr. Lamberton said. But this is how you can fast track that. You fast track that and partner with guys that know how to do due diligence, that know how to analyze these deals, that know how to analyze these markets. Right. So if you partner with somebody like that, now you're deferring to their expertise, which is what you should do, unless you're willing to put in the time and learn it yourself. So the best way to fast track, like if I want to invest in mobile home parks, for example, I have access to the best mobile home park operator, multiple guys I can go and speak to and get knowledge, learn about, hey, is this a great investment? Is this not? Right. And so to me, it's if you find geniuses in their zones, that's how you fast track that. You don't have to go learn it yourself. You use their genius. Right. That's my thoughts on it. And again, the point is that this is, if we want to become wealthy, we have to do what the wealthiest people do. And this is what the wealthiest people do. You just have to look at their where their money is invested, right? They made it in a business, whatever their business was, and that was their main thing. And they grew that into a monster, and they made a ton of money. And now that money goes into investments, and that's where their investments are, right? So now they're diversified that, hey, look, I'm building wealth, I'm building income that's independent of this monster that I built. Whether it's Google,
Right.
whether it's the Indianapolis Colts, whether it's Kraft Macaroni, these guys still have huge holdings in all these different type of asset classes, right? So for us, it's, hey, we just have to think a little different, because if we're going to do what everybody else does, we're going to end up with the same level of wealth as everybody else. If everybody's like, hey, stock market, and they put all their money in ETFs and 401ks, and they only do that, that's what middle America does. That's what the high even middle class people do. But if you look at the wealthiest people, that's not what they do. Right. So we have to create a family office. Family offices, look at what they're investing in. They have experts in different areas, right? But they're not just investing in one thing. They set out, hey, we're going to put percentage of multifamily. We want Class A multifamily. We also want some really good fixed income, right? And we have experts that know how to analyze all of these different things. And we're going to go into all of these different asset classes. Right. So I think that if we want to become wealthy, we should emulate what wealthy people do.
Well, that's great. That's great, guys. So we're going to land the plane tonight. Okay. So August 16th in Dallas, this is happening. We're going to be speaking about all the stuff that we just discussed today. It's going to be deep dive. Dr. Vo and, Jonny Walker, these guys are going to be sharing a host of information. Tom and myself, we're going to be there. So August 16th in Dallas, make sure you guys sign up. 2 tickets, right, guys? 2 tickets free. Yeah. So just make sure you DM us. So with that being said, you guys all, thank you very much. Be great. Dr. Vo, Dr. Walker, Tom.
Bye, guys.
You guys all have a good night. Be
Guys,
great.
thank you for having us, man. It was awesome. Great talking to you guys.